The loan setup option enables you to create a loan for a home buyer or tenant. A monthly principal reduction for the loan will be calculated and reported in a separate column on the tenant ledger. Once established, the monthly loan charge will automatically transfer from the loan column of the tenant ledger to the applicable accounts receivable column. Payments of the loan will be handled as an ordinary payment on account. To access this option, pull up your desired participant's applicant tenant file. Then go into Tenant Info, and finally select Loan Setup. In the main loan setup screen, we can see the type of loan, the original loan amount, the interest rate, the loan start date and first payment date, the monthly payment amount, and finally the number of months on the loan. If you wanted to print the amortization schedule, select Amortize to generate the report. You can create, edit, or delete your loan records using Add, Edit, or Delete at the bottom. Lastly, we can choose to print out statements and letters by selecting Statements and Letters right here. The Loan Status Report, Statements, and Loan Terms Report options will be available by default. However, if you wanted to run letters and no options are available, that means no letters have been set up for that particular loan as of yet. In this case, please contact our support department at 608-786-2366. We'll go through an example of setting up a new loan. And for this example, we'll use the tenant I just created, John Doe. And we'll go into his loan status, or his loan setup screen. Within there, we will select Add and select our loan type. If your program is missing a loan type, you can have that set up by contacting HDS support at 608-786-2366. We'll continue through entering in our tenant's loan amount, their interest rate, the start date and first payment dates, and then when we reach number of months and monthly payment, we have the option to calculate either one of those options based on the other. So if this is a 300-month loan, you could calculate what that monthly payment would be. Or if you knew exactly what you wanted your monthly payment to be, you could calculate how many months it would take to complete. Once we're finished, we select Save. Whenever you change any of the information in loan setup, you should always run the amortization report again, as the monthly interest and payments amounts would most likely have changed. Each time you run the report, you should always go to your current accounting month. In my example, the current accounting month is September 2012, but the loan doesn't start till October. And look at what it says the ending principal balance for your month is going to be. This amount should also be the ending principal balance for the month on the ledger. So we're going to write down this number, 49,887.89, and that is what our principal balance on the tenant ledger should be for the end of October. So if we close out of this and go to tenant accounting, here we are on the tenant ledger, and we will take a look at the ending principal balance for October. And here we can see that there was no principal balance set up, so I need to simply go into the month of October and go to Adjustment. I'm going to go do a code 39 Other Principal Adjustment, and I'm just going to type in the amount it said the loan should be for October. So we'll do 49,887.89. And in the comments, I'll just put in correction to principal balance. And there's our ending principal balance for October. If we could see November here, we'd see that the monthly principal amount would get taken out of that balance every month going forward. Please note that this is something you'll want to do every time you add a new loan record or change an existing record. Go into their tenant ledger, make sure that the principal balance ending for your month matches what the amortization schedule says it should be. And if it doesn't match, you can just calculate what the difference between the two numbers is and go in and do an other principal adjustment for that amount.